Well, as you know, the Conference Board has its own measure of consumer confidence, and the last reading in July was actually pretty constructive. However, since we've come into June, we've had the Delta variant crop up just about everywhere, and the most people who are gaining or who are actually becoming infected are infected with the Delta virus. However, we haven't really seen any changes in terms of restrictions on mobility, but people may decide that they just don't want to go out. And so that can certainly weigh on the economy. And then there's inflation, as we're talking about. And indeed, prices are higher for just about everything. And we have said that potentially that may weigh on consumption ahead.
Yeah, Mark, I mean, would you agree with that? Because it sort of comes down to everything the consumer. And, you know, governments can say, well, you can't do this or you got to do that. But ultimately, if people are nervous, they may not go out. I mean, what kind of shocks are you seeing ahead?
Yeah, I would agree with Dana. I think the Delta variant probably was the key factor in that big decline in sentiment as measured by the University of Michigan. I actually think Dana's measure, the Conference Board survey, is even better because it's tied into the labor market, and that's still very strong. And that's key to the economic recovery going forward. As long as businesses continue to hire, and they've been hiring in July, they hired almost 1 million people. In June, they hired almost 1 million people, and I expect very robust job growth going forward. Then we're going to be okay. And, you know, assuming obviously that the Delta variant doesn't become more of an issue or other variants don't become an issue down the road. If that's the case, then I think we're in pretty good shape here. And this dip we've seen in consumer sentiment will be temporary. It'll right itself pretty quickly.
Yeah. Yeah, I mean, I think everybody, you know, you got the majority of the country, adults that are vaccinated. Certainly in what we've seen from the UK and India, and hopefully it's the same thing here, is that Delta, it burns hot, but it burns fast. Mark, I want to stay with you because the debate is about inflation being, quote, transitory, whatever that means, by the way. If you're a business owner and your rent goes up or you have to pay a worker more to take a job, which we're doing, which, by the way, is good, wages are up, those aren't transitory, are they? I mean, once you give a worker a raise, you're not reversing that. The biggest cost for business doesn't seem like it's going to go down anytime soon.
Yeah, it's wage growth. So, yeah, I mean, you're raising wages. And then the question is, how fast are you raising wages in the future? And wage growth, Brian, as you point out, is very good. It's held up admirably well in the pandemic, which is great, you know, for workers and keeping consumers in the game and spending. And I do expect wage growth to continue to remain strong and even perhaps accelerate because this job market is going to be strong and unemployment is going to decline and we're going to get back to full employment. And I would expect stronger wage growth. That doesn't necessarily mean, though, that is inflationary, that forces businesses to raise their prices more aggressively, because a lot depends on their ability to generate productivity growth. Can I produce just more with fewer people or fewer hours? And so far, productivity growth has held up also very well. It's actually accelerated and more than offset the effects of the stronger wage growth on businesses. So if right now it feels pretty good. I mean, wages are getting higher. Workers are getting higher wages. Businesses are getting good productivity gains and strong profitability. That's a good economy.
Well, Dana, they better hope to get higher wages because based on all the price increases that we just laid out, if they don't get higher wages, then they're going to have a lot less money in their pockets. Certainly, ultimately, though, you know, when I said on Fast Money in the previous hour, I'm kind of tired about talking about the Fed, to be honest with you, because it's sort of every day we're talking about it. But it does matter. It is the super tanker that leaves kind of everything in its wake changed. Do you see the Fed changing its views because of COVID's new rise and maybe staying low for longer, which could be good for equities?
Well, it's really about substantial further progress on its two mandates, right? So the Fed in the last meeting said that, you know, inflation more or less has been elevated, yes, but it's transitory and potentially it's going to trend back down to something just above its 2% target. And the Fed is waiting for that. Also, they're still concerned about the labor market. Yes, we had a really great jobs report in the last reading, but you still have 5 million people who are unemployed. 57% of them are women. And the Fed believes we haven't achieved substantial further progress on either. However, we do think that there are some pretty key circuit breakers here. And one big one is inflation expectations of consumers, and not just short-term inflation expectations, but longer-term inflation expectations. Over the short run, those expectations have risen pretty dramatically. The delta is big. Yeah. But when we look at the long run, it's still pretty low. And so unless consumers think that this is going to last forever, the Fed probably will be willing to wait a little bit longer.